Hello and welcome to Capital Market Live on Channels Television. I'm Will Ibong, and as always, we'll check in and discuss key happenings in the Nigerian capital market this week. But I'm not doing this alone. With me in the studio is Professor Uche Walike, Professor of Capital Market, Nasarawa State University, and the President, Association of Capital Market Academics of Nigeria. Good to have you here live in our Lagos studio, Prof.
Thanks so much, Will. It's been my pleasure.
It's good. It's, seeing you in person, we've always had the Abuja interaction, but today is good to be here. But Prof, a lot has happened this week in the financial and capital markets as it is. We've seen from the hiking of interest rate by the central bank from 100 basis points to 16.5%, and also to the unveiling of the new Naira redesign that we've the new Naira notes. Really a lot has happened, and we had the Sukuk bonds as well.
Correct.
But we're going to start off with the equities market, where we said that the outcome of the MPC meeting didn't actually put a dent to the performance of the equities, as it actually galloped its way to the 47,000 level. Yes. It was up by almost 7%. Prof, how did that happen?
Crossed the 25 trillion mark, this week in terms of market cap.
Yes.
Yes, Will, I would say that for me, I'm still trying to understand whether it has any theoretical basis, any theoretical foundation. And that's because when you, consider the fact that the MPC, hiked rates by 100 basis points, as you rightly said, the immediate reaction by the market elsewhere, is expected to be, a dip in the, market performance. But what we had in our own case, was the reverse. Yes, you could argue that speaks to the fact that in terms of market efficiency, our markets are not that efficient to the point of impounding this announcement, almost immediately. But there is also the argument that it's also possible that the market must have priced in these developments before now. The market must have expected that the rates would be hiked, and that also the inflation numbers that came in the previous week, was going to be high. So all this must have been priced in before the Thursday and Friday when we saw those, rebound, as it were. So for me, I think what largely drove performance, has to do with the corporate results. So a lot of investors, traders are still seeing some of these stocks as having, good fundamentals, based on their results. Looking at their yields, for example, looking at their PE ratios, looking at their Tobin-Q values, and coming to the decision that these stocks have intrinsic value. So you now find traders or investors buying. There's a term we use in finance called buying the dip. When you buy the dip, when you buy promising stocks, that
at a lower price.
Yes, their prices have dropped, below a particular peak. So you buy them in anticipation that their price will, will appreciate. So I think what's happening is the fundamentals driving stock prices, and there's also the bellwether effect. Bellwether effect in the sense that if you consider the stocks too that have pulled the market, they've been largely high cap stocks.
Dangote,
if you look at Dangote, for example, Dangote Cement went from 238, at the beginning of the week to 262. Okay, Airtel Afri, for example, also moved from 1,270 naira per share to 1,450 naira per share. And these are the two dominant stocks we have in the market. Remember, about 5 of them control about 70% of market cap. Talking huge. About Airtel, yes, Dangote Cement, MTN, the Boa Cement. You can also add, Zenith Bank. So a few of them control nearly 7% of market cap. So when they move, when their prices move, you also find this kind of
movement in the share prices.
Yes.
Prof, it looks like the CBN is not going to stop hiking rates any time, in any way, so inflation is tamed. But how much of this, you've talked about the market pricing in these headwinds, how much of it has the market priced in, and how would it affect performance of stock markets when the CBN keeps hiking prices? Will the stock markets be able to keep up the momentum?
I think the the market appears to have received this forward guidance. That's what I would call it. Even yesterday, during the bankers' dinner, that's what brought me to Lagos, by the way. The central bank governor also reiterated it, that the central bank, would continue this tightening stance as long as inflation is not tamed. And of course, that's the primary responsibility of the central bank, to maintain monetary and price stability. So what that means, okay, is that you should also expect the stock market, okay, to also feel get the impact. In the US, for example, as we speak, stocks appear to be rebounding, and that's on the hope, okay, on hopes that the Fed Reserve is about slowing the rate hikes. So this thing should be expected. When you have a situation where the central bank, for example, is tightening rates, you should expect that yields will go up, interest rates are going up, yields are going up. Remember, the DMO issued 100 billion bonds. It opened on Monday at 15.64%. That's quite high. So you expect rates to go up, expect yields to also go up. So expect also rebalancing, in
portfolios by investors,
yes, in favor of fixed
income, from equities to the fixed income space.
That is bound to happen. So if, despite the hike in rates, you still find stock prices going up, then a number of other variables need to be investigated. I have been thinking, maybe I'm wrong, that it's also possible that this currency redesign, by the central bank is having a positive impact on stock prices. How do I mean? We have been told that about 168 billion, has entered the banking system, since this thing started. So it's also possible.
Is it boosting liquidity in the system?
Yes, boosting liquidity. That some of that liquidity may be entering the stock market. But of course, the conclusion will come when I see the report by from the NGX, talking about the participation of retail investors in the market for the month of October, and then for the month of November, when following the the announcement of the currency redesign.
And so, what should investors be expecting for the rest of the year? Is there anything in particular you want the investors to look out for?
Well, I don't see any major trigger now, except for this thing I talked about, the possibility that maybe some money is also flowing into the stock market. As long as the tightening continues, as long as the inflation rate, is not abated, okay, I don't see a rebound, so to say, before the end of the year. So a rebound is likely to happen, much later.
When do you think inflation is going to peak? As in, we're just tightening, but is there any projection as to when inflation, we think inflation is going to peak at a certain point and then start slowing down?
You see, the part of why the central bank is tightening, you can see over the last few months, we've had 500 basis points, since this year, increase, now 16.5. Part of why the central bank is doing that, in my view, is even to curtail inflationary expectation. Okay, the markets, even economic agents generally, have this expectation that inflation will continue to rise as long as we're in this political season, this campaign season. At the moment, it's 21.09%. Okay, so it is very much likely that we may continue to see this. We may not witness disinflation or deceleration in inflation rate until maybe well after the elections.
We did get disappointing GDP numbers from the National Bureau of Statistics. The NBS reported, that was on Thursday, that the real GDP grew slowly. Because let's use the word grew slowly.
Not disappointing. At least it's
more like
still in the positive territory, so it's not disappointing.
So it's more like it grew by 2.25% in the third quarter, from 3.54% we saw in the second quarter. Can you relate this to the performance of the capital markets for the third quarter of this year?
Okay, yes. GDP growth rate slowed down in the third quarter. And if you also look at market performance in the third quarter, of course, it was in the negative. To really understand what happened, or to really relate them, okay, you don't look at year-on-year performance. Okay, because if you look at year-on-year performance, you may not get the picture. So you look at quarter-on-quarter performance. Take ICT, for example, where we have the likes of MTN
and Airtel.
Okay, ICT if you look at the GDP report, ICT actually grew by about 10%. Okay, ICT contributing about 15% to GDP, growing by about 10%. But if you look at quarter on quarter, ICT actually fell by minus 8.7 quarter on quarter basis. That means compared to the Q2 of 2022, that ICT actually fell. Take finance and insurance, another sector that also grew. Finance and insurance, if you look at the GDP report, also grew by as much as 12%, year on year. But on quarter basis, if you look at it, it actually fell by minus 10%. So that quarter on quarter picture will give you an idea of, to a large extent, will explain the performance of these stocks in Q2 of 2022. But again, because the sectors will have, in the way it is classified in the market, does not really reflect the GDP sectors, you may not really come to a conclusion. For example, the agri sector contributes about 29% to GDP according to the last MBS figure, but as a proportion of market cap, it's less than 10%. It's just, you have just the likes of Presco, Okomo, livestock fields. So there are few, less than 1%, okay, in the market. So it may not really tell the picture. As I said, with respect to GDP, 29%, but we don't have many agri firms listed
on the stock exchange.
Yes, on the exchange.
So how do we bring on, attract more consumer goods or manufacturing and, companies into a stock exchange? What is stopping them? Will you say what is hindering them at the moment from listing?
Well, if you're talking about attracting them, of course, that's also part of the initiatives in the revised capital market master plan. Companies need to be attracted, and that's also one of the ways by which you boost liquidity, and also increase the depth and breadth of the market. In my view, one of the ways by which that can be done, apart from having the enabling macro environment, is also for the government to use fiscal incentives. I think fiscal incentives will go a long way in bringing them to the market. By that I mean, for example, if you can have a tax system, okay, that is a tiered tax system that's in favor of listed companies, for example, that will incentivize them. If you say, for example, if you list on the exchange for the first 2 years, there's a tax break or tax holiday, that's also an incentive. Or any expense you incur in listing will be tax exempt. That's also an incentive. So there are many ways by which you can incentivize companies to come to the market. But, particularly the power companies, they're not, really there.
We just had Girigu list not long ago.
Exactly.
That's a generation company.
Exactly. So it is critical we have, a lot more companies reflecting the sectors, that we have, in the economy. In the economy today, we have services sector, industry, and agriculture. The services sector, if you look at that NGS report, actually fell by minus 8%. Agri sector grew by 1.34. Okay, it's only not the services sector. The industry sector fell by minus 8%. The service sector grew by 7%. So what I'm saying is the real sector, that is the productive sectors, talking about industry, talking about agriculture, they need a lot of traction. But let me also admit that in that MBS report, the recently released one, on quarter basis, the agri sector, performed by over 40%, okay, even though it grew year on year by 1.34%. So there is some promise there, but we need to do a lot, in the area of industry, where you have manufacturing, that has about 13 activities. You also have construction, you have electricity. All those need to move before we can also begin to feel their impact, okay, in the economy, and also even from the point of view of the market, because the market, okay, is there to enable these companies raise long-term funds, and they won't be able to raise long-term funds if the investors see them, okay, as having too much risk.
I understand. We'll see. We'll wait and see how the revised market master plan, helps these companies and what the government is going to do about, attracting or incentivizing these companies. This week, the Nigerian Exchange Limited, as the NGX, joined other African exchanges to facilitate cross-border trading and promote free movement of investments in the continent. Other African exchanges participating in Phase 1 cross-border trading initiative are the Bourse Regionale des Valeurs Mobilières, that's the BRVM, and other which integrates 8 West African countries. Casablanca Stock Exchange, we have the Egyptian Stock Exchange, we have the Johannesburg Stock Exchange, Nairobi Securities Exchange, as well as the Stock Exchange of Mauritius. Now, these companies have come together to, connect and on the link to trade live, and integrate the process for easier investment on the continent. Professor Walike is still in the studio with me to give us more insights on it. Professor, so following the launch of the African Exchange Linkage Project, what can you say is the benefits for the Nigerian capital market, and most especially, how will this work?
Okay, I will. If you talk about the AfTA, African Continental Free Trade Agreement, if you talk about the Agenda 2063 for Africa, you will now agree with me that this move is like a low-hanging fruit. It's just like, a step in that direction to facilitate, cross-border trade and then settlement of securities among, African exchanges. By the way, or to be sure, you have about 27 securities exchanges, in Africa, and 7 of them are involved in this. This is an initiative of the African Development Bank, I recall. Of course, it's been very supported by the ASEA, the African Securities Exchange Association. Association. So it's meant to link these markets. You mentioned them, the Johannesburg Stock Exchange of Mauritius. You have the Nairobi, that's in Kenya. You have Casablanca, you have Egypt, you have Nigeria, and then you have the BRVM, the regional stock exchange. So what it does is that it will enable brokers from here, for example, to trade in these markets. I recall that the West African sub-region, the West African market integration, the council, the WAPMIC, is also implementing something similar. Starting with the sponsored access, which they have concluded, to the qualified West African qualified stockbroker. So what that does is to enable you to trade in those markets. Of course, that will facilitate investments, Pan-African investment. And for Nigeria in particular, linking to a market like South Africa will, of course, be advantageous. This is a market that has, in terms of equities, for example, the cap is over 1 trillion naira, $1 trillion.
Wow.
Okay, so when you link with a market like that, of course, there are benefits. Of doing so. Exchange of information, exchange of ideas, will come in. And it will also facilitate investment flows. Okay. We should expect, foreign investments to, increase because of this, this linkage. So it's going to be highly beneficial, not only for Nigeria, but for participating markets.
We'll look forward to that, Prof. So one of the highlights this week of the Capital Market Committee at the CMC meeting was the unveiling of the revised Capital Market Master Plan. Now let's take a look at that.
The main objective of the review was to produce an updated version of the document, primarily to engage stakeholders on the current level of market development and opportunities for further capital market growth. 2, review and update the assumptions and vision of the Capital Market Master Plan and develop targets for the various thematic areas of the plan. 3, introduce a strategy map and KPIs for the Capital Market Master Plan and use the balanced scorecard approach for performance measurement. 4, align existing initiatives with new ones based on targets and strategic objectives. 5, develop an implementation plan for initiatives with clear milestones, deliverables, timelines, resource requirements, and dependencies. 6, identify challenges, opportunities, and risks associated with the Capital Market Master Plan implementation and recommend ways of effective and more efficient implementation. And finally, 7, identify and incorporate new product ideas and initiatives to deepen and grow the Nigerian capital market. I'm happy to report that the comprehensive review of the master plan is now complete, and a revised Capital Market Master Plan has been produced. The review team incorporated wide-ranging recommendations by stakeholders in our market and global best practices to produce a well-articulated strategic plan for the next 4 years. The master plan is designed to chart a strategic direction while providing clarity of vision and a robust roadmap required to facilitate innovation, investment, growth, and expansion of empowering opportunities in Nigeria and beyond. Our vision is to be Africa's most modern, efficient, and internationally competitive market that catalyzes Nigeria's economic growth and development. We believe the plan provides a solid roadmap for achieving this vision as we collaborate with other stakeholders to effectively drive its implementation.
That was the DG of the Director General of the Securities and Exchange Commission, Mr. Lamido Yuguda, and he was talking about the plan, the revised master plan. Professor, as the president of the Capital Market Academics of Nigeria, you must have seen this document, and he mentioned that this document, the revised document, is going to take off for the next 4 years. That means there must have been an implementation of the former master plan.
Yes.
What progress have the SEC made for 2021, since this one is going to kick off? I mean, since this one's going to be for the next 4 years,
yes.
What progress have we recorded so far?
Thank you, Wills. First, permit me to start by congratulating the Securities and Exchange Commission on this feat, having the revised master plan. When the first one was conceptualized and eventually launched 2021 to 2025. I was of the view then that what we needed was a medium-term plan, not a 10-year plan. At that time, I thought we needed a medium-term plan that would end in 2020. Also, consistent with the, we had, the economic recovery. Yes, to tally with that. But we had this 10-year plan, and now we are being revising it, and of course there's need to revise it because a lot of things, have changed. Now that plan had 401 initiatives. Okay, the 2021 to 2025, the original plan had 101 initiatives, but we understand that about 30% of that, is what was achieved, so far. So that's talking about a little, slightly higher than 30 initiatives. And these initiatives include the dematerialization that we had. Okay. Right now, we no longer carry physical certificates. They've been dematerialized.
Automation of
yes. And there's also the direct cash settlement system. Okay. We've had a number of others. The trade alert. We've also had the e-dividend mandate management system. Okay. Those were part of the initiatives. And of course, over time too, capital market operators have been recapitalized. On the part of the exchange, minimum operating standards to implemented. So they were all part of that. Now, remember that plan too had some sub-plans. We had the market literacy and we had the non-interest product. Sukuk today is also gaining footing. And then for literacy, I can also tell you, because I was also, at that time, SEC appointed me a consultant, to work with the Nigerian Education Research and Development Council to come up with a curriculum for capital market curriculum for secondary schools, and that has been concluded. So these are part of the achievements that have been recorded under that original plan.
Prof, we do not have, for lack of time right now, I do hope maybe some other time we'll be able to discuss this and probably see the progress that we've recorded and also the way forward, what to expect from the revised master plan. That'll probably be some other time, Professor. It's good to have you, Professor Waleke, Professor of Capital Market, Nasarawa State University, on the program in Lagos State. Thank you so much.
Thank you, Will.
And that's it on Capital Market. Do join us same time next week. Don't forget to watch this again on our YouTube page at Channels Television. Also follow us on our other social media platforms to get updates. And Will Ibong is bye-bye for now.